Hey everyone, welcome. It is 1 p.m. We just got the closing bell for Wednesday, October 23rd. Now, today was a little bit of a reverse of yesterday, so some people may have been caught off guard, but if we look at the Telegram channel, let me get this open on the SPY. If we look at our Telegram channel, then what we see is that at the beginning of the day, I indicated that 580 and 585 were going to be very important levels. And more importantly, it felt like that SPY was ready for a move, so that if it went below 580, then we could get a reasonably large move. And if it went above 585, we could get a reasonably large move. Now, we opened the day a lot closer to 580 than we did 585. We opened at 581.26. So the likely big move was going to be downwards. And you can see from the daily perspective, it did move down all the way below the EMA 20 and the quarterly VWAP, but it did recover back above it. So we're not in super dangerous territory in the SPY. Let's take a look at it from an intraday basis. Then we'll go ahead and go back and look at it on a daily basis. So this is the S&P 500 or SPY. You can see that basically it went down, and it went down quite aggressively into 11 o'clock before bouncing and recovering some into the end of the day. And this is where we got below the EMA 20, but then came back above it. So that's a positive sign that we ended the day above the EMA 20, that we were able to bounce and recover. So now it just looks like we've got a larger sideways window. So we can just say that, where's my box? We can say that we were in this, but we broke below it. And so now we're more like this, and potentially maybe more like this. So we really do need to see quite a move downwards. So that would be what I was talking about yesterday. The risk to the downside down to that MA50 was about equal to the risk or opportunity to the upside up to 600. So I'm not going to get too excited if we don't stay within those two ranges before the election period. That's a pretty wide range. So it's probably pretty likely that we will stay in there. Now, the market won't really be directional unless we break those levels. That's why I identified those levels. It's just a mild move upwards or a normal pullback to a MA50, and the uptrend would still be intact. If we break that, then we would start to question whether that trend was still intact. But for now, it's still looking fine. So just like over here, we came back, we pulled back to a region that was below the MA50, but all of these moving averages converged. But then what happened next? We came back, and then we bounced off of the EMA 20. So we came back, now we're bouncing off the EMA 20. We'll need to see tomorrow if that holds. But if it does, then that's just another movement just like this, and we can go up a little higher to that 600 region. Let's see. Yeah, 595 to 600 region. So it is possible, and we're not discounting that. It is right now, for now, we see that the bulls are still in control, and that the more likely movement is a little bit higher. Now, if we start seeing the bears start to control and take over, then we'll reevaluate. But for now, the bulls are still in control. They have reasonably good control, reasonably strong control. And so for now, the expectation is that we will continue higher to about this, at the very least, the 590 region. That's our initial gamma pocket. And then if we get above that, we might get to 595 and 600. So nothing to worry about. It's just a normal day in the S&P 500. We went down 5.39. Our ATR is 5.26. That's just barely over one ATR. So it's, do you want to freak out? How exact do we want to be? We need to be a little bit, we have a little bit of leeway inside our definition. So I would call that a one ATR move, just not quite non-random. It's still barely, I would still call that a normal move. I wouldn't necessarily call it a random move, but I will call it a normal move in the markets, and that's not anything that we want to get excited about. It's definitely not something to panic about. We don't want to panic about normal activity. We would only want to get excited about non-normal activity. So this is normal activity, and tomorrow we'll see. But just from what we've looked at so far, the expectation is that there is a higher likelihood that we'll bounce than we will break through. Now we can start looking at some other things to get some clues. For example, CPC. CPC is at 1, basically very neutral, and that doesn't give us any information. Our VIX went up, but not that much. It's at 19.3 at the present. We opened at 18.2. We're still sub 20. So that's not a really big change, a really big move. So nothing to really indicate that we're going to necessarily go even further down. Now, one of the things that we looked at to have an idea that we might be breaking down in that way was the 90-day highs and 90 lows like last week. So let's go back to I think it was Friday. Okay, here over here. Wednesday, we said, hey, this is getting close to 400. It might be time for us to have a little bit of a pullback. And on SPY, that's what, here we go, Thursday. We got that little bit of a pullback, but our mean reversion, not that much though. And so into Friday, what happened? We bounced back up in the 300s. And then we started to come down on Monday. Is this Monday? Yes, Monday. And then Monday going into Tuesday, and that went down to 90, and now today down to 50. Now we're at a more extreme low, and this is a good place for us to bounce back up. Let's see what happened with the lows, if there was the same pattern. Because if that's the same pattern, meaning I guess I should say the opposite pattern, then we are looking at a even more confirmation. So we were only at 16, we went up to 24, 25, 28, 35, 56. So the lows never really changed. It was always in double digits. The highs came down into double digits, pretty low double digits, and either we're going to get caught here and go sideways, or the 90-day highs may bounce, it may start increasing again. The 90-day lows could increase as well, but that is the lower probability event given that we're still seeing buyers in control, and it looks like we're bouncing off of that EMA 20. Let's take a look at our sectors, see which ones did well or did poorly. Okay, this is just our normal average. Utilities on top, silver and gold, defense, so looking a lot of defensive ones at top. But then here we have SMH. We've got XLF, XLK near the top as well. So we still have a little bit of a mixed bag. So how much further can we go up when sectors are all jumbled up? The answer is not that much. We would need more of a pullback in order for this to get arranged in sequence and then allow us a free movement upwards. Over here on a 1 month basis, we're doing a little bit better. And let's go for let's just look at what happened today. Okay, so when I'm looking at today, I'm not looking for that same stack of sectors. I'm just looking at what got attention, what got more money, what got less money. So for today, real estate and utilities. So those are interesting because these are these are interest rate plays. Then we have defense and we have financials. Financials were negative. So the only positive things were defense, utilities, and real estate. So it was pretty broad based, this move downwards. We can see that silver came way down. Our QQQ and our consumer discretionary, our technology, SMH, all of our riskiest sectors came down the most. So it looks like we did have quite a bit of a risk off attitude in the markets today. and interestingly, silver and gold as well. But the silver and gold have been flying up so much, it's about time for a pullback before they can resume again as well. I wouldn't call this bearish for silver or gold, and just a normal mean reversion so that we can continue our movement upwards. It does seem in the short term that that will continue, especially gold. Gold is doing just fine. It's just like what we saw in the S&P, just a mild mean reversion into the EMA 20, a mild mean reversion into the EMA 8 so far, not quite the EMA 20. Everything looks fine in gold. It's this pullback. If it pulls back a little bit more, that would be a potentially interesting entry to go long gold. But for now, we're kind of in this no man's land. If you're really aggressive, you could buy now or near that EMA 8. But from what I'm seeing, that level of aggressiveness is not warranted. And I personally would wait at least to that EMA 20 level, or more importantly, to this liquidity level, which coincides with the EMA 20. Let's see what else happened in our sector. So we saw that tech was down. So let's see. Okay, so QQQ did manage to almost kind of hold this EMA 20. That's close enough for us to say that it's at the EMA 20. We don't want to be super precise when we're looking at this. We don't want to be too nitpicky because that EMA 20 is a little bit of an arbitrary number. And when we look at liquidity pockets, which this also is, well, that's a little bit of a range and an art as well. So we don't need to be super nitpicky about exact precise to the penny levels, but just visually we can see that, hey, this is very close to this liquidity pocket. It's very close to that EMA 20. And it looks like if it can move up from here, then that's just a bounce from those levels. It's not anything to be concerned about. So tomorrow is going to be pretty critical. There's a lot of things where we're like, oh, this is looking like maybe it will. So we can't really say things with much conviction or certainty. And we can never have 100% certainty, but we can have high conviction. And right now is not one of those high conviction times. So we need another days of data in order to give us a little bit of confirmation so we can get a better feel of what is happening. Now, on a down day like this, SPY, what we can look for are very strong stocks, things that held up very well, that either went flat or maybe even went up a little bit or just went down a tiny bit. Remember, the S&P went down about one whole ATR, maybe slightly above one ATR. So if I can find something that only went down half an ATR or a quarter of an ATR or maybe zero ATRs, or maybe even went up a quarter ATR or up half an ATR, those are all strong relative to the S&P. And if the S&P does bounce, it is pretty likely that those other assets or those other stocks will bounce even harder. So that's kind of the gift that we have right now. We have an opportunity to look for relatively strong stocks and for them to potentially perform tomorrow, assuming that S&P does bounce. But as we started this analysis with, and as we've had some additional support for, it does look like that the bounce upward is the more likely event at this particular moment in time. So if I were you, I would be looking for strong stocks that are relatively strong to the S&P 500. There's a few ways to do that. I just gave you a methodology using the ATR. But in other ways, you can just visually look on charts and see how they did. So one that I'm interested in right now is, you can see that I drew this picture. I never released it in my official service because it's too expensive. The options were too expensive. But this is one that I personally took in my own accounts. And you can see that I was thinking that we would bounce off of this pocket. We did pretty well yesterday. And today, yes, it is down, but that's really more just sideways movement. It's only down 0.55%. That's 2.21 on a dollar basis, but the ATR is 725. So that's only not even 1/3 of an ATR, where the S&P 500 was down one whole ATR. So this is relatively strong to the S&P 500. And if the SPY bounces tomorrow, then I can reasonably expect, I can't guarantee, but I can reasonably expect that I'll get a nice little bump up here as well. So that's the type of thing that I'm talking about. Better yet, you find one that actually went up today instead of going down. And that would be an even stronger conviction that we could maintain that relative strength and that you could see a bigger bump tomorrow. So that is it for today. Have a wonderful rest of your day, and I will see you all tomorrow.